Hello and welcome. This is Q4 with BQ. Mastek has reported a steady set of numbers in the fourth quarter. Joining us now to talk about the earnings in greater detail is the company's Chief Financial Officer, Abhishek Singh. Abhishek, thanks for taking the time out and speaking to us on Bloomberg Quint. Well, Abhishek, let me just begin by asking you about what you made of the quarter, your own assessment. What are the deals that you have signed over the previous 3 or 4 quarters that you think has led to these earnings for this particular quarter, and where we can go from here?
First of all, thank you for having me on your show. And yes, it has been a good, steady quarter, as we would like to assess it as. All around the geographies, UK, US in digital commerce space, as well as in India, we have experienced growth. So those are good signs and good foundation for us to build on as we move on to fiscal 20. Reflecting on the year gone by, both in terms of constant currency, we have had our almost around 20% year-on-year growth. In INR terms, obviously, our growth has been much better, and again, reflective of some of the currency support that's out there. Bottom line has also done pretty good, and all of this has been based on our growth both in private and public sector in UK, as well as all the margin efficiency initiatives that we have driven in the business all around. So we feel pretty good based on where we are on all the lead indicators.
Okay, fair enough, Abhishek. So let me ask you a little more about the outlook as well in terms of FY20. Can we expect the same growth rates to come through for Mastek that we've seen in the last year as well, based on the kind of traction that you're seeing on ground?
Yeah, fiscal 20 would be a lot about the third phase of our growth strategy, i.e. the fix, win, grow. This is the year when we are focusing on our balance sheet and monetization of non-core asset to bring it back into the business. And as stated, there are a chunk of non-core assets in our investments in Majesco and some of the other non-core assets that we are looking at monetizing and looking at bringing it back into the business. Aside that, from an organic point of view, there is a mild Brexit headwind that we have experienced. I'd like to believe that will settle over a period of time, and the business will come back to the growth trajectory that we are used to. So without getting into the number guidances and stuff, yeah, we endeavor to maintain the trajectory, and that's our aspiration.
Okay, Abhishek, it's interesting that you mentioned Brexit. Do you anticipate that could work out against your operating margins in the near term? That's one. Secondly, what sort of impact do you see the rupee appreciation have on your margins? Thirdly, what we're also noticing is that the entire industry is facing certain headwinds because of higher people's costs. There has been a talent supply crunch, and because of which, a lot of the players in the industry are paying higher in terms of acquiring new talent. What is your assessment with respect to several of these factors when it comes to your operating margins?
Yeah, you bundled practically all the challenges facing the industry in one go. But that said, I would say the first thing first is that Brexit for us is not a challenge but an opportunity. That's the way we are looking at it. Post Brexit, Britain would need a set of IT systems to kind of exist, which was hitherto coming from European Union or following that algorithm. So over a period of time, it will present an opportunity. In terms of pricing pressure or margin impact, it's digital brings in a set of capabilities that everyone would have to pay for, both in terms of customer paying for it as well as service providers paying for the right talent. That said, we are looking at a different set of solution at this point. It's not about just landed resources and bringing the project offshore, but it is also about tapping into the local base to create that talent and create that capacity. So we are working in UK and what we call as graduate trainee program, where we are hiring freshers out of college and putting them through the training process, whereby we have our supply base, i.e. the local sourcing strategy. That has both cost element as well as capacity element, and that would help us scale. So we feel pretty good about the sourcing aspect of it. And I guess overall it will always be a supply and demand story. So the better projects that we have and the better customer service that we can provide will help us attract the talent as well. I mean, I would say it's a self-fulfilling one at that point.
Okay, fair enough. My final question is to do with your diversification of business, and we all know that you get a majority of your revenues from Europe. A lot of investors and analysts out there would prefer that Mastek also diversify a little further in the other geographies. What do you have to say about this? And if at all you guys are carrying out any steps in order to further diversify, perhaps not even in geographies, but in terms of clientele as well?
Sure. As far as geography is concerned, I would say that the geographies we are operating in are billions of dollars of addressable market space. Now, the return on the investment, return on the sales effort, return on the human capital would be highest and best served in the geography that we are right now. And that's why we are focused on where we are. As far as clientele is concerned, I mean, wherever we are always about customer. If customer needs a solution, we absolutely will provide. But that said, I mean, it's not restrictive. Even in public sector, there are a plethora of departments that we work with, from health services to immigrations to Ministry of Defense and Justice and other names. So the clientele is, I would say, reasonably diversified, though we tend to bucket it as public sector, but it doesn't mean it's one decision maker, so to speak. So at this point, I would say that that endeavor continues both in public and private sector. We would look at onboarding new brands. We would look at onboarding newer customers or newer decision makers within the same sector.
Okay, Abhishek, we'll leave it at that. Thank you so much for joining us and talking to us on Bloomberg Quint. We wish you best for the future. Thank you.
Thank you.